All right, ready to dive deep into some earnings?
Let's do it.
Today we're looking at SNDL. They're making some serious moves in the Canadian cannabis and liquor markets.
Yeah, they're kind of a one-stop shop for,
Adult recreation.
Exactly.
We'll be breaking down their Q3 2024 earnings call, getting past all the jargon to see what's really going on.
It's a pretty interesting story.
Oh, it is. And of course, we'll wrap things up with a "this is not financial advice" trade idea. So first up, let's talk about SNDL's impressive growth streak. They just hit their 11th consecutive quarter of revenue growth in the cannabis segment.
11 quarters. That's incredible in an industry like this.
It really is.
It shows how effective their strategy is. They're consistently expanding. And in this quarter, they saw an 8% year-over-year increase.
8%.
Yeah, which might not sound like a lot, but you have to consider the context.
Right. The Canadian cannabis market's been facing some challenges.
Exactly. But SNDL is still finding ways to grow.
So they're playing the long game, building a sustainable business. But growth alone doesn't pay the bills.
Nope, we need to talk profits.
And that's where things get really interesting. SNDL also announced record-breaking gross margins of 26.6%.
That's huge.
It really is. And it's not just by chance. They're making some smart moves, both on the liquor and cannabis sides.
Absolutely. What's impressive is how they're squeezing more profit from each dollar of sales.
How are they doing that?
Well, it's a multi-pronged approach. They're fine-tuning their pricing, streamlining operations to boost efficiency, and even making tough calls by exiting less profitable parts of the business.
Wow.
They're basically giving a masterclass in maximizing profitability.
So they're growing revenue, you're getting more efficient, but what about the bottom line? Are they actually on track to turn a profit?
Well, that's the million-dollar question, isn't it? They did report positive free cash flow this quarter, which is a big step in the right direction.
For sure.
And they've also launched a restructuring program to cut overhead costs further.
Restructuring program. It sounds a little ominous. What does that actually mean for the average consumer? Like, will we see any changes in the quality of their products or services?
It's a valid concern. Restructuring can involve streamlining operations, maybe closing underperforming stores, potentially even job cuts.
Right.
But SNDL has emphasized that their focus is on eliminating redundancies, becoming leaner, not cutting corners on quality.
Got it.
They're betting that these moves will ultimately lead to a stronger business, one that can deliver even better value to customers.
Okay, let's hope so. But SNDL hasn't just been cutting costs. They've also been on a bit of an acquisition spree.
Oh, yeah.
They recently acquired Novacanabas and Indiva, two moves that seem pretty strategic.
Okay, strategic.
So what's the thinking behind these purchases?
Well, think of it as SNDL building an empire, brick by brick. These acquisitions are about more than just grabbing market share. They're about expanding into new and potentially lucrative segments of the market. For example, by taking Novacanabas private, they gain full control and can accelerate its growth trajectory.
Makes sense. And what about Indiva? What's the strategy there?
Well, with Indiva, it seems like they're making a big bet on the edibles market.
Makes sense. Everyone loves a good weed gummy.
Right. But they're not just betting on edibles. They're aiming to dominate the market.
Wow.
Indiva brings something special to the table. Key patents for fast-acting edible formulations.
Oh, interesting.
So that means SNDL now has a technological edge in a segment that's attracting both seasoned cannabis consumers and curious newcomers.
So this is a big deal.
Yeah, especially when you consider how quickly the edibles market is expanding.
All right. So we've got organic growth, strategic acquisitions. And get this, they're sitting on a mountain of cash, over $263 million, with zero debt.
Wow, that's a lot of firepower.
It is, especially in a market where many cannabis companies are struggling. So imagine you're SNDL with a vault full of cash, your competitors scrambling. What moves would you make?
That's a great question. Well, they've already hinted at their priorities. First, they're looking to further expand their retail presence in Canada. They want to be the go-to destination for both cannabis and liquor.
Makes sense.
And that means more stores, more brands, a wider selection for consumers.
Right. But with that kind of cash on hand, they could also make a splash in the U.S. market, couldn't they?
Absolutely. The U.S. cannabis market is huge, and SNDL has expressed interest in exploring opportunities south of the border.
Interesting.
They could acquire existing U.S. operators, partner with established brands, or even build their own cultivation and retail infrastructure.
Yeah, the possibilities are endless.
Exactly. And with their financial strength, they're in a prime position to make a major move.
All right, so we've got growth, profitability, acquisitions, and a war chest of cash. It seems like SNDL is firing on all cylinders.
Yeah.
But here's a curveball. They've also been actively buying back their own shares.
Oh, really?
Yeah. Isn't that a bit counterintuitive when the stock price is already on the rise?
It might seem that way at first glance. But share buybacks can be a clever strategic move.
How so?
Well, by repurchasing shares, SNDL reduces the total number of outstanding shares, which automatically increases earnings per share.
Right.
And this can make the stock more attractive to investors, potentially driving the price even higher.
So they bought back shares at $1.90 each, and the stock has since climbed to over $2.20. Is that a sign that SNDL is undervalued? Are they trying to send a message to the market?
It's certainly a possibility. Share buybacks can signal confidence in the company's prospects.
I see.
And the timing of these purchases suggests that SNDL might see their stock as a bargain at current levels.
Okay.
Of course, there are always risks involved, but this move definitely adds another layer of intrigue to their overall strategy.
Intriguing indeed. But let's not forget about the elephant in the room. The one challenge that looms over every legal cannabis operator in Canada, the illicit market.
Right.
How is SNDL navigating this ongoing battle, especially in a province like Ontario, where the black market is particularly strong?
It's a constant uphill battle. Imagine trying to run a legitimate business when your competitor down the street is selling the same product at a fraction of the price, with no taxes or regulations to worry about.
Yeah, I could see how that would be tough.
That's the reality facing SNDL and other legal retailers. They're essentially playing a game with two different sets of rules.
So what's their game plan? How do they compete against an opponent that doesn't play fair?
Well, SNDL's approach has been twofold. First, they're focusing on providing a superior customer experience.
Okay.
Think about it. You're not just buying a product, you're buying into a brand, a level of quality, and a sense of trust.
Yeah, that makes sense.
They're curating a wide selection of products, offering competitive pricing, and investing in knowledgeable staff who can guide customers through the often overwhelming world of cannabis.
So they're aiming for that premium Apple Store kind of vibe.
Exactly.
But that can only go so far. What about the price difference? The illicit market can undercut them pretty aggressively.
That's true, and that's where the second part of their strategy comes in.
What's that?
Advocacy.
Advocacy.
Yeah, they're actively working with policymakers
Yeah.
to push for stricter enforcement of existing regulations and for changes that would level the playing field.
Interesting.
They're advocating for things like streamlined licensing processes, lower taxes, and more flexible marketing regulations.
Right.
They're basically saying, let us compete on a fair basis,
Yeah.
and we'll show you that the legal market can thrive.
It's a tough battle.
Yeah.
But it sounds like they're not backing down. Now, I know you're itching to hear our crazy trade idea.
Oh, absolutely.
But we need to lay the groundwork first. We've covered a lot of ground here. And it's clear that SNDL is a company on the move. They're growing revenue, boosting margins, making strategic acquisitions, and sitting on a pile of cash. But what does it all mean? What's the bigger picture here?
Well, what's fascinating is that SNDL isn't just reacting to market trends, they're actively shaping them. They're consolidating their position in Canada, positioning themselves for potential U.S. expansion, and they're doing it all with a level of financial discipline that's rare in this industry.
Okay, I see the pieces coming together. They're building a robust, vertically integrated business, from cultivation to retail, and they're not afraid to play the long game. But let's be honest, we all love a little speculation. So, with that disclaimer out of the way, remember folks, this is purely for entertainment purposes, not financial advice. Let's have some fun. What if SNDL decided to go full Amazon of Vice on us?
Okay, I like where this is going.
Imagine this. SNDL leverages its existing infrastructure, its brand recognition, and that mountain of cash to create a one-stop online shop for all things Vice in Canada, booze, bud, you name it. They could even throw in some premium smoking accessories, gourmet munchies, maybe even some CBD-infused bath bombs for those who like to unwind after a long day.
It's a bold vision, but not entirely implausible. They already have the foundation in place, a strong retail network, established distribution channels, and a growing online presence.
Right.
Plus, the Canadian market is ripe for disruption. Think about it. The government has already laid the groundwork for legal online sales of both cannabis and liquor.
So SNDL could just step in.
Yeah, exactly. They could become the dominant player, essentially creating an Amazon-like platform for the Vice industry.
And here's where it gets really interesting. Imagine the data they could collect. With every purchase, they're gathering valuable insights into consumer preferences, spending habits, even regional trends.
Oh yeah, they could use that data to personalize recommendations, refine their marketing strategies, and develop new products tailored to specific customer segments.
So they can become the ultimate tastemakers, curating the perfect Vice experience for every customer.
You're painting a very compelling picture. But let's not forget about the challenges. Building a platform of that scale would require significant investment in technology, logistics, and customer service.
Sure.
Plus, they'd face stiff competition from existing online retailers, not to mention the ever-present threat of the illicit market.
Those are valid points. But remember, Amazon faced similar hurdles when they first started out. They had to build trust, overcome logistical nightmares, and convince people to embrace a new way of shopping. And look at them now. SNDL has already demonstrated agility, ambition, and a willingness to adapt. If anyone can pull this off, it might just be them.
I'm not saying it's a sure thing, but the potential upside is enormous. They could capture a significant share of the online vice market, create a powerful brand loyalty program, and generate a treasure trove of data that would be invaluable for future growth.
All right, so let's say you're buying into this Amazon Vice scenario. How would you play it? Obviously, SNDL stock would be the core holding, but are there any other ways to leverage this potential trend?
Well, if you're feeling really bullish, you could explore option strategies. Call options, for example, would allow you to magnify your potential gains if SNDL's stock price takes off. But remember, options carry inherent risks and are not suitable for all investors.
Of course. What about ancillary plays? Are there any other companies that stand to benefit from this potential shift towards an online Vice ecosystem?
Absolutely. Think about the companies that provide the infrastructure for online sales and delivery, payment processors, logistics providers, even marketing and advertising firms specializing in the cannabis and liquor sectors. They could all see a surge in demand if SNDL's grand vision comes to fruition.
So SNDL stock as the cornerstone, a sprinkle of options for the adventurous, and a side of ancillary plays for diversification. Not a bad portfolio for someone who enjoys, shall we say, a bit of excitement in their investments. But again, not financial advice, just some food for thought.
Exactly. It's all about exploring possibilities, connecting the dots, and thinking outside the box. Who knows, maybe this Amazon of Vice idea will become a reality.
And maybe we'll be looking back at this conversation in a few years, patting ourselves on the back for being ahead of the curve.
Or maybe we'll have a good laugh about how wildly off base we were. That's the beauty of the market. It's full of surprises.
Well said. But even if this particular scenario doesn't play out exactly as we've envisioned, one thing is clear. SNDL is a company that's not afraid to shake things up.
I agree.
They're ambitious, they're strategic,
Yeah.
and they're playing for keeps.
Definitely. They're a fascinating case study in how to navigate a complex and evolving industry. They're challenging the status quo, pushing boundaries, and creating a blueprint for success in the Canadian vice market.
All right, so let's recap. SNDL delivered another strong quarter with impressive revenue growth, record-breaking margins, and strategic acquisitions that position them for continued success.
For sure.
They're tackling the illicit market head-on, and they're sitting on a pile of cash. That gives them the flexibility to pursue ambitious growth strategies. Whether or not they become the Amazon of Vice remains to be seen. But one thing is certain, they're a company worth watching.
Absolutely.
So there you have it, SNDL's Q3 earnings call, dissected and demystified. We uncovered the key takeaways, explored the potential implications, and even dared to dream a little with our Amazon of Vice scenario.
It's fun to think about.
It is. But remember, this deep dive is just a starting point. We encourage you to dig deeper. Check out SNDL's full earnings call transcript and investor presentation, and form your own conclusions.
Exactly. Do your own research before making any investment decisions. We're just two enthusiasts sharing our perspective, not offering financial advice.
But hey, sometimes the most outlandish ideas turn out to be the most insightful. Who would have thought a decade ago that we'd be talking about a publicly traded cannabis company with aspirations of building an online vice empire?
Right. It's a wild world out there. And SNDL is definitely one to keep on your radar. They're pushing boundaries, challenging conventions, and showing us what's possible in the evolving landscape of Canadian vice.
So keep those trading minds sharp, stay curious, and maybe, just maybe, you'll be the one to spot the next big trend before everyone else.
Thanks for joining us on Talk Tickers. Until next time, happy investing.